Another fatal Tesla crash on autopilot goes to trial, but this time with new evidence. The families of the victims have taken the accidents to trials for wrongful death at times, but Tesla always won. That's because in virtually all cases, Tesla was able to show that the driver was not paying attention at the moment of the accident or leading up to it. When using autopilot or FSD beta, Tesla tells drivers that they need to pay attention at all times and to be ready to take control at all times. If drivers are not doing that, they are misusing the system. This is a sensitive matter, but there's little to no doubt that the driver wasn't paying attention and was on his phone. From this evidence, you can say that this was the driver's fault. However, the lawyers representing the family are taking a different approach and focusing on Tesla, knowing that the system could be misused and not doing anything to prevent it. But hold on, what do you mean Tesla is not doing anything to prevent this? NHTSA made Tesla add all of these warnings to a point that many Tesla owners are saying this is way too much. This is making the system actually more dangerous because you can't even use it. And when you use it, you have to be so careful not to disengage it that it's actually counterproductive. Falcon 9's first stage has landed on the Of Course I Still Love You drone ship, completing this booster's 17th launch and landing, and Elon Musk commented on this too. Falcon 9 launches today, carrying 4 terabits per second of capacity to orbit. It looks like Samsung SDI has advanced its target time for producing 46Phi batteries to early 2025. Choi Yun-ho, CEO of Samsung SDI, told reporters at the opening ceremony of Interbattery 2024 that 46Phi batteries can be fully mass-produced by early next year. And personally, my understanding is that it includes Tesla-style 4680 batteries or, for example, Rivian's 4695 cells. So I take it as good news for Tesla. We have a ton of new Model 3s that are waiting at Shanghai's southern port for export on March 10th. And the upgraded Model 3 Highland will soon be on display to meet customers in South Korea, and it has now been first spotted on Korea's roads. Starlink has over 2.6 million customers as of March 2024. Since the Starlink customer count was 2.3 million in December, then the growth rate is about 100,000 customers a month. Since some customers turn off service for months not in use, the term customers isn't the same as subscribers. Well, yeah, Starlink's growth is pretty impressive.
Well, first let's address the reason why it's lagged. I mean, it's pretty simple. The numbers have come down. I mean, if you look at the earnings revisions for the last 12 plus months, they've been terrible. I mean, I think we started for 2023 somewhere early in that year on $6, and it came all the way down to $3. And I think we're at a period of time right now where the worries likely exceed the reality. And we had some numbers last week come out of China that weren't very good, but those people didn't take into account that the new year has been pushed into February. Also, some stuff that happened in Germany. Their plant came down for about a week because of arson, a week plus. And in the U.S., people are worried about the production of their new Model 3. And we think that the best way to kind of gauge, for the most part, what's happening with Tesla, particularly in the U.S., is to look at their prices. And they've been pretty stable in the U.S. over the last few months. So, there's a lot of wood to chop still in the quarter, but in the near term, we think that we may have overcorrected here to the downside.
Yeah, with the news of Giga Berlin situation being resolved as we speak, the stock is up right now. And this is with the markets being slightly down, actually. However, when Gary Black met with Tesla's management in Austin earlier, he said that the Tesla team did not want to say that the gross margins have bottomed. So Gary, to some extent, implied, I guess, that Tesla is likely to cut prices further. And if that happens, the earnings estimates are going to come down again. And with that, possibly the stock could drop. So in the short term, we certainly could have more noise. But in the long term, what really matters is the next generation vehicle, FSD, Tesla's energy division, and other projects like Dojo and the Tesla bot could also pay off handsomely.
Look, we're in a little bit of a pause period right now for the stock. In the near term wiggles, we think we've overcorrected, but for the stock to really get its legs, we have to have 3 things happen. First, the next generation vehicle has to start to ramp, or people have to gain confidence that it's going to ramp and be successful. Second, their margins need to go up. And the most likely lever for that happening is the increase of FSD, full self-driving penetration, which leverages the AI that they've built, in addition to volumes starting to pick back up. And third, it's continuation in growth, really good growth in their energy storage business. So when you talk about leveraging this R&D that they've spent a lot on, it's two real products that come out of that, the big spending. It's number one, that next generation vehicle, which we think should start production in the second half of 2025, and continued FSD penetration. Now, we think that the FSD offering from the company at $12,000 currently is a little too rich, particularly relative to the cost of the vehicle. We think the company should cut the price of that FSD to really increase penetration and really have the margins start to turn in. If you think about it, that offering is about 100% gross margin, very, very high gross margin because it's a software upgrade.
I think FSD V12 is likely going to increase Tesla's FSD penetration. And what would make me quite bullish on FSD is if Tesla suddenly started offering free trials. If we start seeing that happen, then you actually know that Tesla thinks FSD is already really good, and therefore it is actually trying to get people to use FSD as much as it possibly can. Because at least with FSD V11, if you use it, maybe if you are into tech, you will love it, and maybe you'll buy it, and maybe you'll get a subscription if you cannot buy it. But for many people, if they have a disengagement and if it's a bit awkward, would they want to keep using it? Probably no, they wouldn't want to keep using it. But with FSD 12, if it's smooth, and if you do have a disengagement, but it's done in a smooth way, I think you would still want to keep using it. Which is why FSD free trials could possibly bring Tesla a lot of revenue if FSD V12 is actually pretty good. I haven't tried FSD 12 myself yet, so I'm not really sure if Tesla should go with free trials for FSD V12, but if Tesla does, that's bullish, at least for me personally.
George, we have seen, though, the price wars play out. Obviously, Tesla far from the only automaker, one of many, I should say, that has been forced to lower the prices, obviously putting pressures on margins, very similar to what you were just saying. How do you see that, more broadly speaking, beyond Tesla, shaking out just a bit, and that pressure to the downside in terms of boosting demand? How much longer are they going to be forced to slash prices in order to drive the demand that we simply have not seen?
Well, look, there's been a pause, like I said, recently, particularly in the US. The price declines that we saw for the most part in 2023 is sort of ebbed right now, which for us is an indication that maybe things aren't that bad. And what the company did strategically by being that aggressive is, first of all, they get to sell more vehicles, right? Because interest rates went up and most people finance the purchase of their vehicles. So that meant that the prices of vehicles went up artificially. But second, it put a lot of their competitors on their back legs. I mean, margins got a lot worse for some of the pure play EV competitors. Sales got a lot worse for them. And even for the traditional OEMs that try to compete against Tesla, their margins got significantly worse because they couldn't compete with Tesla on price. So what we saw is, longer term, what Tesla did is put a lot of its competition on the back foot, particularly in the United States and Europe.
This is what I have been talking about for well over a year now. With lower prices, Tesla is going to seriously hurt competition. It's going to hurt Tesla stock in the meantime, but in the long term, it could actually put Tesla in a stronger position because there would be less competition.
And so let's talk then about China, because that's one of the larger kind of lingering risks right now for Tesla. Is sentiment shifting so much in the region that there would be a longer term implication for how Tesla is able to operate and sell into China as well?
That's a great question. I mean, look, we see the real competition for Tesla long term. Look, we really like Rivian in the United States and in parts of Europe and other parts of North America. But in China specifically, there's some very, very good OEM competitors, some pure play EV companies. The company has one plant in China right now, able to produce about 950,000 vehicles. And they're running, despite this monthly volatility, they're running full tilt there. And we continue to believe they'll run full tilt in that country. So there's really good competition in China, but we think Tesla can operate that factory at relatively full capacity that leaves them in a good place in that country.
Tesla is doing fairly okay in China, and especially when the next generation vehicle comes out, I think that's where Tesla is going to start really putting serious pressure on some of these pure play EV companies in China.
So George, as we wrap this up, we started this segment talking about the share price being under pressure. We're trading around $179 a share today. What more specifically does that upside look like?
Look, our price target is in the 230s, and we base that on 26 times our 2026 estimates. And we think that's going to happen as volumes start to pick up next year and the year after that, based on increased Cybertruck production and the next generation vehicle. And importantly, we think that the margins will start to get better, particularly as we've seen an abatement in price reductions, at least for now, and costs continue to come down for the company. So, in the near term, we have these wiggles, and we think, like we said, we've overcorrected to the downside in the near term. But, for real outperformance, we need to next generation vehicle or some visibility to that, increased margins based on FSD mostly, and continued growth in their energy storage business. Those three things will really get the stock to get its outperformance legs of old back.
But it could also be some other things. For example, maybe some other investment firms are going to come out with increased buy ratings for Tesla stock, like Morgan Stanley did earlier last year, and they increased their price target by a lot because they included Dojo. So if Tesla does a Tesla bot demonstration and all of a sudden everyone thinks, oh, the Tesla bot potentially could be worth $100 per share, $200 per share already for Tesla stock, the stock would of course rise. So I don't think it has to be these three things. I'm not counting on the Tesla bot, by the way, for the Tesla stock to go up in the short term, definitely not. But I'm just saying, it's not as simple as that. There are so many possible catalysts for Tesla stock waiting to happen. Some, of course, will never come to fruition. Like, for example, the Dojo project is somewhat high risk, but also high reward. Make sure to like and subscribe if you haven't yet, and I will see you in tomorrow's episode. Thank you so much for watching. My name is Matt Posius.